Since the stock market crash of April 2025, I have now invested more than $140,000 in total across 5 different ETFs. And in this video update, I'm going to show the ETF portfolio. We'll focus on the ETFs that I have recently purchased. Of course, I'll also share a bit of my motivation. Why? Welcome back to Happy Investors. My name is Jorik Vermeulen, and if you've been following us, you already know that since 2024, I've been saying that the American stock market is quite highly valued, and I myself have been investing for more than 10 years, almost 11 years now, mainly in growth companies. That's a specialization, that, especially in strategic thinking, which I really enjoy. I'm also an entrepreneur. I have my own business, and I have investors, and we're doing very well. That's great. But I try to project that way of thinking into the investments I make. Still, I've chosen to invest in ETFs because I've been saying for quite some time that I think the market is a bit overvalued, and especially the American stock market. Since the summer of 2024, I've also given many updates about my portfolio, at least once a month, including videos about new stocks and ETFs I'm buying, and sharing that information. Yes, I'm planning to sell more from America and actually buy a lot more in Europe. Well, that has worked out very well for me, unfortunately. But I also hope it has for you as a follower of police investors. Hopefully, you've been able to benefit from that. Then, like Mr. Trump came to power, and in April, the stock market crashed hard with about a 20% drop, which I hadn't anticipated myself either. Anyone who claims to be a predictor is either crazy or just very lucky. I'm not a predictor either. In fact, during the coronavirus crisis, I once made a big mistake. During the coronavirus crisis, I bought a lot more. That worked out very well. But then, after a strong recovery in a short period, I thought I could outsmart the market and ended up selling a lot, admittedly with substantial profits. But the mistake, the reasoning errors I made was, hey, this can't all rise so quickly, right? This must just be a short rebound, and after that it will drop again. But I was wrong. So what happens then? Well, then you suddenly have a lot of cash, and that cash you have to reinvest. So you end up buying back in at higher prices. I learned from that mistake because although in the IMWA months of February and March, this year I had a huge amount of cash, almost 60 to 70% in cash and only 30% in stocks. Well, that's a very skewed ratio. Normally you would have about 80% invested, or actually even 100%, and only a small percentage in cash. And the larger those amounts are, which is now the case for me after more than 10 years of investing, the more strategically you have to handle them. But the mistake I made in the past, which did cost me some money, not so much actual losses, but more missed earnings. But does it really matter? Life isn't really all that important when it comes to money, is it? But it is convenient to have a bit of money, especially if you have the luxury to play around with it. That bit of financial freedom we aspire to. And at least I don't want to miss out on those earnings a second time, so I'm not entirely sure what the right entry point is or not. The only thing I think is, after this quick rebound, American stocks are once again valued quite a bit higher. And those tariffs, all that uncertainty, that's still not completely resolved. But I'm not going to make the same mistake twice. That's kind of the essence of the story. So I did buy a lot, but mainly in ETFs. And not the ETFs you might expect, because I'm still cautious about investing in America. Actually, the country I'd most like to invest in, and ideally in a specific ETF, which I only bought a very small amount of. Instead, I bought 4 other ETFs, and they all have something in common: a lower valuation. And as a growth investor par excellence, someone who is willing to pay high price tags for future growth, I still find myself being cautious in this situation. I have been for months now, as you know, and you follow us at Happy Investors. But since April, I had actually become optimistic again. So, of course, I tend to behave a bit contrary to the crowd. In other words, when the markets crash, that's when you should actually be happy. At that time, I also produced more videos, pointing out, listen, these stocks have dropped significantly, but they could show growth potential again in the future, so that's exactly the time to buy. I also alerted our members, at Happy Investors, now is not the time to panic. After a 20% drop, you're already too late to sell anyway. That's exactly when you should just buy more. In any case, if you're investing in ETFs, don't pay too much attention to it. Just keep buying more and be happy. A 10%, 20% drop, just keep buying more. All of this doesn't mean that there couldn't be a major crash in the near future. Because what Trump is doing is, of course, also related to government deficits, government budgets, and there is definitely a reason behind it. How it will all turn out is just very complex, and no one knows for sure. But you shouldn't overthink it and just keep consistently applying the buy the dip strategy. And if we're unlucky or lucky, the market could move a lot. Well, it seemed to have that potential in April, but it turned out differently. As you can see, it's now almost back to the level it was before April. Personally, I'm a bit more cautious about that, which is why I'm now investing in ETFs, because trying to time the market often doesn't work out well. So I try not to time it too much. But these ETFs that I bought all have a relatively lower valuation, so they're not what you might expect. That's why let's just take a look in this update. I hope you can learn something from it, that it will be useful to you. I'm not going to guarantee that these ETFs will make money. No idea. It's my money or it's my risk. And I'm not saying you should buy them. So keep in mind, this is never personal advice. Okay, then let's take a look at the ETFs. So more than $140,000 has been bought from the drop in April up to now, today. And not to brag, because as you know, if you follow me and the monthly portfolio updates where you can see exactly which buys and sells are significant, there are always losers as well. That's the game. But I did manage to time it reasonably well in quotation marks. And I've explained before that for me, it's not about timing here. For me, it's first and foremost about protecting my capital, so I don't incur too much loss. Plus, I have a kind of optimistic opportunity. Maybe that's not the right word, but whatever. Or maybe when I have cash, I have other plans for that than maybe stocks and ETFs. So, yeah, for me, it was just a kind of luxury position. But in general, you don't want to have too much time and especially your cash invested. Still, I believe that especially the American stock market is still carrying a hefty price tag. And these rebounds, where the market recovers very quickly, I'm not completely convinced by them. Okay, but that's it. Now we have several portfolios. I'll be just a quick reminder for those watching for the first time or who haven't followed us in a while. Multiple portfolios. This one is a private, one of mine at DEGIRO. Then a few months ago, I made a major switch where I partially sold my portfolio at DEGIRO and transferred it to MTS. I did this based on very positive experiences with Interactive Brokers. Interactive Brokers is a very large platform, just like DEGIRO, but much cheaper. And Maxis is a kind of Dutch variant that operates on the same software. Many more features, much lower transaction costs, especially for dollar purchases. Not for euro purchases, but definitely for dollar purchases. That's just how it is for me. Yes, but for me, it was a good switch. I actually think it's a good choice for some others as well. But overall, DEGIRO is still a fine platform. So we have DEGIRO. Private, we have MTS Private. Then we also have the MTS Business Portfolio, and I still have a DEGIRO account, which you can see here on the screen for our joint account. Well, maybe my girlfriend should pay me out a share of the profits because we've made quite a return. Luckily, I'm happy about that with my girlfriend's name. We're going to enjoy traveling with it or something like that. And actually, we've only made major purchases since April 14th. The same goes for the other purchases that we'll take a look at in a moment. And so this is about the ETF portfolio. We also see some stocks here, but we're not going to talk about those right now. We're really going to talk about the BEFs. I'll make a separate video about the stocks. And every month, we also provide a complete overview of all the portfolios with stocks and ETFs. In my portfolio, which you can simply follow. All you have to do is subscribe, and I always appreciate that. We're going to look at the ETFs. And just to give you one example, here we see the first purchases starting from April 8th. What does that actually look like? From March, it was a bit at a peak, and then everything dropped a lot. And April 8th, we can see that here on the screen. That was actually almost the end of the decline. After that, it dropped a bit further and then recovered significantly. Keep in mind, it's entirely possible that all these prices we're seeing, the S&P 500, AEX, the China Internet ETF, could all drop sharply again if the uncertainty around tariffs increases or if the trade war escalates again. And maybe even much worse because what Trump has done could have turned out very badly, and maybe it still can. Be careful not to get ahead of yourself. But at the same time, we also don't want to time the market too much. when investing. It's always so difficult to keep things really simple. Buy ETFs if you're not sure, and that's what I'm doing myself right now. I'm buying a few more ETFs and every now and then some individual stocks that I think look particularly interesting for the long term. So these are the stocks and ETFs that I have bought. The Clink Semi China Internet ETF, the Hot Uranium Miners ETF, highly volatile, highly risky, not recommended for most people. Then we also bought more of the Invesco synchronized. On April 14th, here again, you can see some China Internet ETF shares. Here we see number 4, which is the iShares Oil and Gas ETF. We also bought that one at Maxis. Although it has a different ticker. At DEGIRO, the ticker is ISRD. At Maxis, the ticker is IOGP. And still an amount of $25,000, which is not a small sum for some people. And finally, we also see some purchases. These are from this week, namely the ETF in Spain, which I'll talk more about shortly. And the ETF for Greece, which I've mentioned before and several times. Actually, I would also really like to have the ETF from Argentina here. I've mentioned that one frequently in recent months, but unfortunately, I can't buy the ETF from Argentina, not at DEGIRO, nor at Maxis. So that's actually quite a pity. Well, I also bought the ETF from Greece in the business portfolio. The picker looks a bit odd, but this is simply at the ticker GDS 1. You can also buy the Amundi Greece ETF with the ticker GDS at DEGIRO, and you can also buy it at Maxis with the ticker GIRES 1. And there we also see a position of about 15,000. Well, a little bit more about that cash position. So I had a lot of cash, but the cash position in the business portfolio has now decreased to about 33%, which is actually still quite a lot. And I have also invested even more now because I know that due to the good results from the business Mark D account recently, more cash will be coming my way. Well, I don't need that cash in the short term, so I'm going to invest it in my business portfolio, or maybe in the other opportunities I mentioned earlier. So that's still quite a lot of cash. And here at Maxim, we still see 40K in cash. And in the joint portfolio, we also still see 20K in cash. What does that amount to? A little more than 20%. So all in all, I still have quite significant cash positions. Again, the rule is actually that you want to be about 100% invested, at least to avoid timing the market and missing out on returns. If you have doubts about the valuation of the overall market and the economic situation, then you might want to, for example, invest 80% and keep 20% in cash. But even so, I actually have a larger cash position than that. So could I have taken better advantage of a downturn? Absolutely. I could have put all that money into the China Internet ETF around this time, or the S&P 500 or another ETF, so be it. And then, of course, you would have had a lot more return. But I remain cautious. I keep buying a little here and there, and sometimes maybe too late, but maybe not. Better to be late and cautious than to take on too much risk. But of course, that's also because I have a bit more money these days. And yes, if I suffer losses in the short term, it's harder for me to earn that back with my income. So I simply have to manage my assets more sensibly. And I don't need to have an average return of 20% per year. So if I can achieve 10%, that's perfectly fine as well. But you can also see that I invest in different types of ETF or theme funds. All of them are more volatile, so there are bigger price fluctuations. And as you can see, almost none in America. But mainly they're actually quite special themes. And this can lead to above average returns. So what is the average? For that, you should think of the world ETF. An important example in Europe is, for instance, the Vanguard All World ETF. There's also the ticker highlight AH. Whatever you want. And these two, as you can see, these have both dropped and risen. And the WB has also increased by about 14%. But I think, for example, that an Amundi REIT ETF with the ticker GRE, which has also dropped a lot, you can see that it is now actually higher than the last peak. That's the case with these kinds of ETFs, specific theme ETFs. They can potentially achieve slightly higher returns simply because the current valuation seems to be low compared to the growth that is expected. However, theme ETFs are always more suited for the short term. What is the short term? Yeah, that's hard to define. But think of periods like 6 to 12 months. And probably, if the trend continues, up to about 24 months, then such a theme is done and the momentum fades. The valuation has probably increased by then. If the future potential seems to be priced in, then you sell and reinvest that in other themes that probably have more growth potential at that moment. Well, it all sounds great. Yes and no. For example, actually, I completely missed the best ETF of the recent period, namely the defense ETF. Let's see if we can quickly find one. The Van Eck defense ETF is just one example. It has risen an incredible amount recently, just since 2025. It has already gone up by about 30%. That's really great. I told you about the Argentine ETF that I really would love to have, and it's also doing very well. It has also risen sharply lately. And for example, gold has also performed quite well. But I don't invest in gold myself. That's not my type of asset. By the way, it's interesting if you want to do something with technical analysis. And just to be clear, I actually only look at fundamental factors. So is the valuation acceptable or relatively low? And is there future growth for ETFs? So that's a bit harder to estimate, which is why I always look at the stocks within the ETFs. But there's also the aspect of technical analysis. There are some, and for that you can use certain tools. And one example is you see here the last peak actually didn't rise higher than the first peak. That's often a sign, usually a bad sign, that it could drop again. You can see here that the price breaks through this line, which is the EMA 20. That is often a kind of first selling moment provided, and it coincides with a declining MACD and a declining stochastic, which is exactly what we see here on the screen. So the gold ETF is, at least in the short term, at a kind of resistance level, and the momentum is now starting to turn negative. What is the downside of thematic ETFs? You have to pay closer attention to the price movements. So it's not really that passive. On the other hand, just as I've already mentioned, when you buy into a theme, you should really hold it for at least 12 months, so for a year. Then after another year, you look at it again and think, oh, yes, it has performed well. What is the future potential now? And from there, you make new choices again. So all in all, it's still relatively passive but it's also fun to be involved with it, and it's important that you actually enjoy it. That's really important too. Now let's take a look at some ETFs in detail, why I bought them, and we'll go through them briefly. And I've already highlighted some of these ETFs before. And for example, we actually focused more on oil and gas in 2023 and a bit in 2024. Then I sold them because the momentum and potential were declining. That ties back to what I mentioned earlier. With thematic ETFs, you really have to deal with certain trends, macroeconomic developments as well. And just a bit of momentum is also very important in that regard. And especially just the overall valuation. But now I've bought them back again after a significant dip. The Spain ETF might be different than you'd expect. And the reason I'm adding this ETF to my portfolios now, although it's still relatively small in terms of percentages. Remember, this amount might seem high, but it's all about the percentages. Because in Spain, there are some interesting macroeconomic developments. For example, with large investments coming from China. And I actually find this ETF quite interesting. It's fairly concentrated with about 20 holdings or so, give or take. The important thing is that this is actually the most well-known ETF. This is the iShares Spain ETF, and its ticker is EP. Then here we see ticket EP. However, that one isn't available for purchase in Europe, so we buy it through Xtrackers with a different ticker. And that ticker is ASP, and it contains slightly different holdings than the ones we see here on the screen from the iShares Spain ETF with a different ticker. But still, it's important here to look at what actually makes up the top 3 or top 4 holdings, because these are high percentages. So that actually means this fund has invested 17% of its capital in Banco Santander, 16% in Iberdrola, which is also related to sustainable energy, about 13% in another bank, and 10% in Industria. The Casino Textil Kent Ofrezedame, which means nothing to me at all. Did you look up this company? Well, among other things, it's a holding company, and they have, for example, the Zara brand of fast fashion, which gives them a continuous advantage in their portfolio. And here we see other names that also match with that other ETF, with the ticker or to click taken spam ETF EP. So they will likely show similar results. This ticker, or rather this ETF, is currently rated as a strong buy based on a data pool of many different ETFs. So that's why it caught my attention. When I started to do further research into the companies, we're seeing strong momentum. That's often a sign that the momentum can continue, but not always. And that's also the risk with momentum investing. So that's why we always need to look at the valuation. The Features website does not provide a fundamental valuation of these stocks. For that, I looked at the one from the Amer under ETF, which you can also look up yourself on Google. And what you'll see is that the weighted average valuation of all these stocks right in the basket is around a price to earnings ratio of 11. And that's not on the high side. I find Iberdrola interesting for long-term development, but for example, also Banco Santander, what we see is that a 70% position is simply a large bank, also well known here in Europe. And well, the current valuation doesn't seem super high. Certainly not if there are macroeconomic developments such as increased investments. Then, of course, a bank like that would benefit. They simply profit from that. The current price to earnings ratio is around 8. Dividend yields are around 3%, though in the past they have been much higher. You do indeed see significant upward potential at the moment, and often such a trend continues. And for me, there's really no reason to reconsider when I look at all these eco stocks, at least the top 5. No reason to assume that the momentum will stop based on valuations. So here it's about the fundamental development. Of course, I could always be wrong. And keep in mind that an ETF like Spain will naturally show higher price fluctuations. But at least for now, we're seeing a rather impressive strategy, price increases. And the idea is, of course, that this upward trend will continue. Another ETF that has a somewhat similar narrative to Spain is the one for Greece, namely the Amundi Greece ETF with the ticker GRE. But before that, let's first look at another ETF, the more internationally known ETF, with the ticker Greca. With that one, I can show some different data, but first, let's take a step back to the distilled China or the Spain ETF. There you also see a trend when I talk about momentum, and this is where a bit of technical analysis comes into play. So the first or crucial factor for being interested in buying for the longer term is the fundamental valuation sound, meaning, what are these companies doing? Are they achieving profit growth? And can we pay an acceptable price for them right now or not? That's the only thing you really have control over. Unfortunately, not the future. But a nice bonus is if you spot a trend where the price suddenly starts to rise sharply. And if you look at the all-time high, which is still far above the current level, that's also a matter of psychology. And we basically see the same pattern with the ETF for Greece. We need to load that for a moment. And then we actually see an even more extreme pattern. So the ETF for Greece has already risen a lot in recent years. But if you look at where the peak was, of course, I'm not saying that it will ever reach that previous all-time high again. But still, it's quite a big difference. Even if you just look at 2010, the price level is still minus 65%. I'm not claiming that the current ETF with its current holdings will show the same pattern as in previous years. Greece, of course, has been through quite a lot. I have no idea what the future holds, but the patterns are interesting enough. It makes you start to wonder, like, what's actually going on? Let's take a look at the ETF. So we bought the Amundi Greece ETF, and its holdings are a bit different from the other ETF. I'll show you in a moment. Why am I showing you that? Because it allows me to also include a bit of valuation. So what's the difference with the Amundi Greece ETF that I bought? Does it also include the largest holding? That's Coca-Cola. You're with a 15% weight. But apart from that, these holdings are actually quite similar to those in the other ETF, namely GREC. So you'll see pretty much the same holdings there, and they're basically all financial companies. 50% is financials, and in the Amundi Greece ETF, 40% is financials with a total of 24 holdings. So they're roughly comparable. The only difference is that Coca-Cola is included in the ETF I bought. So what's good to look at next? That would be the fundamental valuation. And we see that the price to earnings ratio for 2025 is estimated at 8.6. That makes sense since the majority are banks, and the return on equity is expected to be 12.6. This basically means that you can pay a relatively favorable price for, let's say, with the certain profit potential over the next 12 months. I don't dare to make any predictions about the long-term potential of this ETF, but the patterns are interesting enough to invest a bit of money. And it's just like poker. You have 100 chips, and if you put one chip on something, that means 1%. So I haven't put 100% of my money into this ETF. Converted, it's only about, let me calculate, about 10 to 15% of my assets invested in the Greece ETF. I think I'm on 10% MAO, and that's the case with every thematic ETF. Yeah, the 10% mark hasn't been exceeded for these beige funds. So it's not like you put all your money into such a thematic ETF. It's a maximum of 10%. It can turn out well, but it can also turn out less well. And I think the Greece ETF is very interesting. It also has strong momentum, as we can see here in this screener. And the narrative is really mainly that the banks have good potential, but it can also be very volatile. We'll see how it goes. I think this is a good move. And finally, I've also taken positions in the Invesco QQQ ETF. I've talked about this before. Ideally, I wouldn't put all my money, but a very large portion of my money, into this. But after the quick rebound, I'm still not convinced that this is really a very good entry point. Still, I bought in, as you can see here in this portfolio. Yeah, around April 14th, if I remember correctly. And the return is about plus 13%. Not bad. An extra $2,000. Nice. I don't think this is the right time to buy a lot of Invesco QQQ, but I could be completely wrong. So basically, I just try to buy the dip whenever possible. I still hope that there will be a big crash, but maybe it will never happen. So at least I have quite a bit more money in the market now, and still a large cash position, although it has shrunk considerably. But I still have ammo and ammunition in case the markets drop further. Finally, I took positions in, so to speak, oil and gas exploitation. Well, this is simply about oil and gas. It's as simple as that. It has nothing to do with sustainability, but here it's about investing. Here it's about generating returns. And I'm not buying this ETF for the next 20 years. And this ETF has also dropped a lot. Same story. The valuation has gone down. They're still just strong companies. Oil is still simply needed for the world economy, no matter how you look at it. And I think this is another interesting entry point, actually. The second one since 2023 had to wait a long time. And we'll see what happens. Today it's down 3% or down 1%, but of course it's really about the next 6 to 12 months. And after that, we'll see what happens. And finally, of course, the uranium ETF. That one isn't in this portfolio, but we've talked more about uranium in other portfolio updates. And in the upcoming videos, I'll also do a deep dive into each ETF, providing much more information so you can understand and make your own decisions. But as you know, there is no personal advice in these videos, and I'm not saying these are good choices. I've made choices that have delivered good returns so far, but I don't know if it will be enough to achieve high returns in the long term. So outperformance, and in addition, I've already made it clear that this is mainly because these are thematic ETFs that I'm using for the coming 12 months, and I'm not sure whether this is the right time to enter or not. And unfortunately, no one has a predictive, a crystal ball for the future. If only I did, it would be more fun, and I'd be able to help you better. But unfortunately, that's the game. So that's it about the ETF portfolio. Do you have any questions? Let me know. Thank you for watching. Subscribe if you find this interesting, and in the upcoming videos, we'll continue to provide value with deep dives not only into ETFs, but of course, also into stocks. And naturally, my specialty, growth companies. Thank you, and see you next time.